If you're buying a home in Kentucky, one of the biggest questions is, what documents do I need for mortgage pre-approval? In this 2026 Kentucky Mortgage Document Checklist, I walk you through the core documents required for FHA, VA, USDA, conventional, and Kentucky Housing Corporation KHC loans. As a summary of what is needed for a mortgage loan pre-approval letter, required for all Kentucky mortgage loans: 30 days of pay stubs, 2 years W-2s, 2 years tax returns, if required, 2 months bank statements, all accounts, retirement and investment statements, if used.
So, you're thinking about buying a home in Kentucky. That's awesome. But I get it. The whole mortgage thing can feel, well, a little intimidating. Don't worry. Today, we're going to break it all down with a simple checklist. The goal? To get all that confusing stuff out of the way so you can get to the fun parts, finding your perfect home. All right, let me ask you something. What do you think is the biggest hurdle standing between you and the keys to a new home in Kentucky? Seriously, take a guess. Is it the house hunt itself? Haggling over the price? Nope. The real roadblock, it's probably not what you think.
Believe it or not, it's the paperwork. Yeah, just the paperwork. It is, without a doubt, the #1 reason for delays, for stress, for all that frustration. But here's the great news. That's the one part of this whole process you have almost total control over.
So, let's change how we think about this. It's not a dreaded pile of paperwork. Instead, let's call it your core document toolkit. Seriously, getting this toolkit ready before you even start looking is the secret weapon for a smooth, fast, and way less stressful home buying experience. Okay, so this toolkit has 4 main parts, 4 pillars, really. It's simple. Pillar 1 is identity and residency, who you are. Pillar 2 is income, what you earn. 3 is assets, what you own. And 4 is your history and debts, what you owe. Let's jump right into the first 2. All right, let's get into pillars 1 and 2. This is really the foundation of your entire mortgage application. Lenders just need to confirm 2 very basic things right off the bat. First, who are you? And second, do you have a steady income to handle the loan? It's that simple. Now, this first part might seem like a no-brainer, but trust me, it's absolutely non-negotiable. You'll need a valid photo ID and your social security card. That's just to prove you are who you say you are. And that 2-year address history, that's super important. It shows lenders stability, and for them, stability equals lower risk. Okay, time to talk money. This is where we show what you earn. Your pay stubs from the last 30 days, that shows your current income. But lenders also need to see the bigger picture. So they'll want your W-2s and federal tax returns for the last 2 years. That proves your income is consistent. And hey, if you get bonuses or you work on commission or have a side hustle, those tax returns are absolutely crucial to get that income counted. Now, here's where things can get a little different depending on your job. If you're a standard W-2 employee, it's pretty straightforward. Pay stubs, W-2s, you're good. But if you're self-employed, a freelancer, or a business owner, get ready to show a little more. Lenders will want to see your business tax returns, your business bank statements, and something called a profit and loss statement, or P&L. It's basically just a summary of your business's income and expenses. All right, we've covered who you are and what you earn. Now let's move on to the next 2 pillars, showing what you own and what you owe. This is where we complete your financial picture for the lender. They want to see your savings, sure, but they also need to understand your existing debts to make sure you're really ready for homeownership. So when it comes to your assets, lenders need to see exactly where the money for your down payment and closing costs is coming from. That's why they ask for your last 2 months of bank statements. They're tracking the source of the funds. They also want to know you have a little bit of a financial cushion, some reserves. That's where statements from your 401k, IRA, or any other investment accounts come into play. Okay, this next part is all about proving you're a reliable borrower. And here's a pro tip. Having a solid 12-month history of paying your rent on time is one of the best things you can show a lender. To them, it's a huge green flag. It's also super important to be totally upfront about all your debts, even private loans that might not show up on your credit report. Being transparent now means you get a much more accurate and reliable pre-approval. So we've nailed down the core toolkit that pretty much everyone needs. But now let's get into some of the special cases. We're going to talk about the documents you might need for some of Kentucky's most popular loan programs. The ones that come with awesome perks like low or even 0 down payments. FHA loans are a huge help, especially for first-time homebuyers. But they are pretty thorough. For instance, if a family member is giving you money for your down payment, which is awesome, you'll need a signed gift letter from them. It just proves it's a gift, not a loan you have to pay back. They might also ask for a simple letter of explanation if you have some gaps in your employment or a few bumps on your credit report. For all the veterans and active duty service members out there, VA loans are an incredible benefit. The main thing here is just proving your service. For veterans, that means digging up your DD-214. If you're still on active duty, you'll need your Leave and Earnings Statement, or LES. You'll also need a Certificate of Eligibility, the COE, but don't sweat that one. Your lender can usually get that for you pretty easily.
USDA loans are another amazing zero-down option for homes in rural areas. But there's a really unique rule you have to know about. Because these loans are based on household income limits, lenders need to look at the income of every single adult who will be living in the house, not just the people whose names are on the loan. That's a huge detail you don't want to miss.
And don't forget about our amazing state program here in Kentucky. The Kentucky Housing Corporation, or KHC, offers down payment assistance. To get it, you just need to show you're a Kentucky resident, and, this is the big one, you have to complete a homebuyer education course. They just want to make sure you're set up for success from day one. Okay, so you've built your toolkit, you know about the special documents you might need. Now what? How do we take all these papers and turn them into that golden ticket, a strong pre-approval letter that lets you walk into an open house with total confidence? And this right here is the whole point. Getting your documents together isn't just a chore for your lender. It's about empowering yourself. When you have a solid pre-approval, you can shop with confidence. It shows sellers that you're a serious buyer, and in a competitive market, that can make all the difference. So here's your 6-step action plan to get it done. 1. Gather your core documents. 2. Figure out which loan program is best for you. 3. Upload everything securely to your lender. 4. Be ready to answer questions quickly. 5, and this is a big one, don't open any new debt. Seriously, hold off on buying a new car or opening a store credit card. And 6, just keep in touch with your lender. It's that simple. Look, with this checklist, you've already cleared the biggest hurdle. The whole process isn't so mysterious anymore, is it? So now you can focus on the really fun part. The only question left is, what's your new Kentucky home gonna look like?
Call or text 502-905-3708 with your mortgage application questions. Kentucky Mortgage Loans Only. Equal housing lender.